Good evening. It's David Edwards, president of Heron Wealth in New York City, and my colleague Buff Parham down in, I always get this wrong, South Carolina?
Kiawah Island, South Carolina, to be exact.
South Carolina. Well, everybody, it is Sunday, December 19th. The winter solstice is in 3 days. So if you long for the sun to return, as I do, it's coming. Tonight, we haven't received too many questions. So Buff and I thought through a few things that would be good to talk about. And if you have questions during the webinar, shoot them in on chat. We'll try and reach them at the end. Buff, why don't you jump in with the questions that we worked out earlier today?
Well, I think we're going to start with kind of a brief look back at 2021. And what's the one word that you might use to describe this past year?
The one word was the same word as last year, resilience. Mm-hmm. And there's two things I'm talking about. One is the resilience of average Americans, and particularly our clients, who fought through every possible struggle this year and came out on top. And then the other is the resilience of the American economy, which sprung back far faster than anybody had imagined and is now well above the levels of March 2020, right before the pandemic started. And I think it's instructive to look at how the 25 or so of our families who are business owners dealt with the past year. For sure, things were pretty bleak between March and May of 2020. And I spent a lot of time on the phone talking with our clients and making sure they got their PPP loans. I got my PPP loan. And that was a real lifesaver for a lot of companies. Not everyone survived, but the ones who did actually ended up with a reserve of capital that they've never had before. And so that enabled them to go out and hire new people and expand their businesses. So for example, my business had the best year ever, grew 51% in revenues last year. We were working so hard, I had to hire 2 new people. So talk about resilience. I was worried about my own business in May 2020, but I've never had a better situation than right now. The ongoing failure to resolve the pandemic will continue to drag on the year to come. And we'd hoped it would be over by now. And obviously, vaccine resistance enables reservoirs of unvaccinated people to be scattered around the United States, around the world. That creates opportunities for new variants to sprout. First we had Delta, now we have Omicron. The mortality rate in the United States is still number one. It's about 825,000 people right now. It will be another 200,000 by the end of 2022, and the economy doesn't seem to care at all. Sad for individuals and families, but the economy doesn't care. If the economy doesn't care, the stock market doesn't care.
I think you may have answered my next question. I was going to ask you what development of this year you think will have the most impact on next year. It sounds like you're saying the pandemic.
So when we did our conversation in November talking about the hard infrastructure bill and the soft infrastructure bill, I was hoping that the soft infrastructure bill could come to fruition. And that was a bill that was going to address climate change, continue to pay $400 credit per child to low-income families, get internet out to average Americans, get press on green energy. That would have enormous benefits to the economy, and I don't think it's going to go through. You still have Manchin of West Virginia put his foot down. He doesn't like the green energy element of it because he owns coal mines, and he doesn't like the fact that it might be inflationary. And so as a result, our opportunity to invest in our economy, make the kind of investments that the Chinese are making right now, that enables them to leapfrog us, we'll just slide further in the slipstream. There's always an unknown. And it's fun to look at a chart of the US stock market over the last 50 years, and then add in all the horrible things that happened in the last 50 years, whether it was the Korean War, the Vietnamese War, the Vietnam War, the 9/11 attacks, the first Gulf War, assassinations of Kennedy and Robert Kennedy and Martin Luther King and Malcolm X, riots, and yet the stock market always seems to make its way higher. And the reason why is because bad things happen every day, but the people who work for General Electric or McDonald's or Johnson & Johnson go back to work every day and do their jobs, and that's what keeps the economy growing.
So do you have a word that might be appropriate for 2022 at this point?
Hopeful. As in, I hope we can get past all of the things that, if you turn on the television or read the newspaper or heaven forbid, look at your Twitter feed, you just want to kill yourself. Everything just looks, so bad. And there's a crazy disconnect. Joe Biden's ratings are the absolute low of his presidency, all the way down in the 40s already. Well, wait a minute. Unemployment is 4.5%. The economy is booming. The stock market's at a record high. We seem to have some good ideas about how to address climate change, which, by the way, is clearly a thing after this past year. And nobody gives them any credit at all. Shrug. That's how it goes sometimes.
I think you could characterize the country as cranky.
Very cranky. Very cranky. When you read about people attacking, cabin attendants on aircraft, put those idiots on the permanent no-fly list that day,
Right.
And you hear about people rioting in school board meetings, ban them permanently. Why do we have to, pussyfoot around about this stuff? If people are idiots, treat them as idiots. Anyway, we did talk last month about inflation. I said I was taking a wait and see approach on inflation because the Federal Reserve was taking a wait and see on inflation. Well, now a month later, 6 weeks later, they've got some more information. They're a bit more concerned. We do hear, messaging from the Fed that they're going to start raising rates in 2022. No particular surprise; they would do that eventually, and that will put a damper on the bond market. Long-dated bonds will fall in value, and also that'll put a damper on the stock market because higher interest rates means the value of future stock market earnings are less, which lowers the value of the stock market. It'll grow. It just won't grow at the 18% we saw this year.
Well, take a shot at the CPI this time next year. Where will we be?
So for this juncture, it's 6.9%. That's the highest number in like 30 years. I'm going to say 4% or under. And the reason why I say that is because we're still ricocheting around from the 2020 and the 2021. People had a lot more cash for goods than they usually had because they're spending a lot less on services. They were going to less movies, they're eating out less. At the very same instant that the world supply chain got all jammed up. And so, you have these crazy shortages of cream cheese in New York City or Christmas trees or, but all these problems seem to go away pretty quickly. I mean, I ordered a toaster yesterday. It was delivered today. That's pretty good on supply chain. I couldn't get it faster if I'd gone to the store. So let's assume that, or let's project that the bottlenecks work themselves out as physics. They're putting ports on 24 hours. They're trying to get more truck drivers hired, and see inflation coming down about 4% next year. And then a couple of years after that, it might be back to the long-term 2 to 3% that's prevailed for the last 20 years.
Well, it looks like we've got this great resignation in full swing. Will the job market continue to have more openings than it can fill?
Yes, it will. We were, a month ago trying to understand, wait a minute, unemployment has fallen to 4.6%, but there's 4 million less Americans working now than in 2020. Where's the disconnect? Well, now we have some more information. It turns out the disconnect is that a lot of boomers in their 50s and 60s have decided to retire prematurely. Yeah. And then, also COVID hits people older than 65 pretty aggressively. It's killed 1 out of 100, Americans who are older than 65 in this past year. So there's simply fewer people available than there were before. People in their 20s, 30s, 40s, they're looking for jobs pretty hard. And what they're finding is that, hey, I'm making, $15 an hour here. I can go there and make $16 an hour, or 18 or 20 or 25 or 20 or 50. And so it's, there's been a 20-year stretch. The real wages for average Americans peaked in 2000 and have been declining steadily ever since because US employers found that they could outsource, they could bust unions, they could use automation and technology, and they've pressed that as far as it can go. And now all that's left are jobs that need humans, but unfortunately there are fewer humans than before, so wages have to come up. And I'm really happy about that. Wage pressure doesn't affect me, right? I'm a East Coast, liberal, elite, whatever. And it doesn't affect my clients who are also generally in the 1% or higher category of net worth and income. But I used to tip 15% and now I tip 20% because I've come to appreciate how hard people work for me for how little money. And companies will figure out how to pay higher wages and still be profitable. And the ones that can probably shouldn't be in business in the first place.
I think that a lot of people have discovered free agency.
Yeah, well, the corporations, when I was a young trainee at Morgan Stanley back in the 1980s, they spent a fortune on me and my peers, making us smarter, giving us skills, elevating our, professionalism as rapidly as possible. And all those training programs went away because they're expensive. Well, now you don't have any loyal staff. So don't cry because you can't get people. You just got to pay.
The pandemic. Do you think we should start looking at COVID as a norm of everyday life?
Yes, we're transitioning from COVID as a pandemic to COVID as endemic. And what I mean by that is, we've already had 2 rounds of primary shots. People are now getting their booster shots. I'm scheduled to get mine the first week of January. I wonder if I'm a little too late on that. The problem is that as long as there's a reservoir of unvaccinated people in the world, there's an opportunity for COVID to settle in, evolve, and come up with a new variant. So it took Delta, 6 to 9 months to scatter around the world. It's taking Omicron 4 weeks to scatter around the world. So that's the bad news. The good news is all diseases get less lethal over time. The super lethal variants kill off their hosts before they have a chance to jump to the next host. Bubonic plague used to be pretty lethal. It still exists today, but it's not a death sentence though it was in I think it was the 13th century, 14th century.
That's close.
Check my history notes on that.
Do you think that? Go ahead.
The other thing that's been interesting to see, just in the United States, is how hotspots come and go on about a 2-month cycle. So, for example, in August, September, Florida was way high, and the Northeast was low, and the Rockies were medium. And then 2 months later, the Rockies and Michigan and Minnesota were extremely high. Florida was dropping down to nothing, and the Northeast was coming back up again. And now the Rockies are dropping down, but the Northeast has heated up again. So you can literally see the virus working its way back and forth across the country. We almost got down to no virus at all this past June, July. And I feel like after we get past this Omicron hump, which could last maybe only 4 weeks, looking at the information that's coming out of South Africa, where it was first identified, it looks like this could also be a 4 to 8 week hump, and then we'll be heading back down to lower numbers again. It will still be another 200,000 dead Americans by the end of 2023, and we'll probably be getting annual booster shots for COVID, the way we get annual booster shots for the flu.
Do you think that additional and more permanent mandates look inevitable?
I absolutely do. At this point, I have zero patience with somebody who says that their freedom is more important than getting their vaccine. And the reason why I say that is, you don't have the right to drive drunk. And the reason why you don't have the right to drive drunk is because you're a danger to other people. And I feel exactly the same way about the vaccines. And at this point, there's no evidence it's that horrible for you. But people are stubborn and difficult and don't like doing what they're told. And then they experience 20 times the mortality rate of people who are vaccinated.
Yeah.
Maybe that's a good thing. Maybe that's a way of weeding out population, get a little Darwin in there. I don't know. That seems kind of cool for Christmas.
The stock market. Obviously, equities were stellar in 2021. Even with the Fed changing course, do you think these indexes will keep surging in 2022?
Yeah. So 2021 had 2 advantages. Actually 3. One, it was rebounding still off of 2020, which itself was a positive year. 2, you had this huge surge of earnings across the S&P 500. A couple of companies died, went out of business for good. Particularly retailers had a tough time. But Amazon ramped, Apple ramped, Johnson & Johnson, Pfizer, right? Moderna, they all ramped. JP Morgan ramped. And I always tell people, revenues drive earnings, drive the stock market. Interest rates at rock bottom levels, barely above zero for the last 2 years, also help because it makes the value of future stock market earnings more valuable today. Now we have the interest rates in retrograde, they're going higher, that puts pressure on the stock market. And also the easy gains have been made in the stock market, in the earnings for companies. And now they got to get back to the more difficult earnings growth. But I will say this, after the 2008-2009 recession, the US Congress was very tight-fisted about putting money back into the economy to get things going. And so that economic recovery was the slowest recovery of any recession since the 1930s. And the unemployment rate stayed higher much longer than usual. Well, here we've had the GDP soaring. It just blew past the previous records. And unemployment dropped right back down to the levels of March 2020. And then you had this $1.5 trillion hard infrastructure bill that threw more money into the economy on top of the trillion that we put out back in March or so. And then there's this other potential, 2 trillion, 1.5 trillion, who knows where it's going to end up, potentially happening in 2023. Well, if you give the economy a lot of money, you definitely turbocharge it. You turbocharge it to the point of inflation. I'd rather have the economy growing and worry about inflation later.
Yeah. Any particular sectors that could be big winners next year?
So we have a very traditional position that our primary strategy is that healthcare, technology, and financial services are the 3 fastest growing parts of the economy. And we tend to overweight them as a result. But we also have real estate and consumer staples and utilities for stability. And then we have things like consumer discretionary, trying to take advantage of the stock market. So we really haven't changed the targets all that much in the last 25 years that I've been running this firm. Those seem to be numbers that work. What it does mean is that coming into 2021, we were overweight large cap technology companies and underweight energy companies. And we began to sell large cap growth and start buying small cap value, particularly in the oil sector, whatever. Well, now we're looking through our portfolios and see who's drifted too far in the other direction. And we'll be doing some selective selling starting in January, push those capital gains until April 2023.
And now for our favorite topic, politics.
Yeah.
Any prediction on the midterm elections at this early date?
What can I say without offending everybody? So it seems pretty clear that the Congress will be Republican in 2022, or that will swing in 2022. There's also a high probability that the Senate will break the current 50-50 and be more like 51-52 Republican and then 49-48 Democratic. And if that happens, if either of those happen, the Biden legislative plan comes to an end, right? The Republicans have no plans of their own, but they're dead set on letting any Democratic plans get through. And then the presidential election starts, January 10th, 2023. We already can see that, Donald Trump will probably run for president again. I suspect he would have Nikki Haley as his VP to offset Kamala Harris as a female vice president. And he would do that even if he was covered with, indictments and civil lawsuits. Maybe a stroke would hold him back. I don't know. And then on the Democratic side, Joe Biden, gosh, he'd be something like 79 next year and 81 when he runs for the presidency. Does he have the strength to keep going? I don't know. I don't see myself working when I'm 81 or 82. Kamala Harris has not had a lot of success as a vice president. Would she run for president in his place, or would there be 12 or 20 or 40 Democrats running as well? I always tell people that I used to be a Republican for the longest time. I gave up after 2004 because I didn't change my opinion about how the economy should be run or how governance should be done. But the Republican Party moved so far away from me, I couldn't stay there anymore. Not a big fan of the Democratic Party either. You've got the centrists here, and you've got the progressives here. They spend as much time fighting each other as fighting the Republicans. So it's really not a two-party system anymore. It's a three-party system, and neither segment has enough votes to really make a permanent difference in the lives of average Americans. And then average Americans don't show up to vote.
Kind of a micro question. Assuming that the House Committee on January 6th holds public hearings in prime time, any impact on public opinion about that whole situation?
I don't think so. I mean, because first off, everyone's news is segmented these days.
Yeah.
So if you watch CNN or MSNBC, you're going to see every bullet point all the way through. But it's preaching to the choir. And then if you're watching Fox News, you won't see any of it because they're too busy worrying about Mr. Potato Head or critical race theory, or someone burned down the Christmas tree in front of Fox News last week. It was a bigger story than 9/11 for them. And so I don't see one iota of change of opinion as we go through these trials. But it's definitely fascinating as a historian. And I'd love to know, I'd love to see, like, moment by moment, which of 6 Republican congressmen and women were hip deep in trying to support a coup. And, it's living history.
Truly. What's good in the chat box? Anything good?
Let's see if anything came in. If not, we'll all go drinking early.
I think I saw a couple.
Let's see here. Yeah, so we got a couple good questions. This one is from John in Pennsylvania. He wants to know about thoughts on the auto industry worldwide. A very fascinating question. Right now, if you want to buy a new car, there is no negotiation on price. And the reason why there's no negotiation on price is because orders for new cars are backlogged significantly. I happened to buy a new Grand Cherokee this year, and when I picked it up, the sales lady said, "Congratulations, you got 2 keys. From here on out, everyone's only getting 1 key because we don't have enough chips for the keys." What it is interesting is that 0% financing is pretty much the norm right now. And so I said, fine, I'll pay for this car over 5 years instead of paying for it up front. The demand for cars is high from consumers, a lot of them bringing in their government checks from support programs last year. It's also very high from car rental companies. Hertz and Avis all sold off their cars last year and now don't have enough cars and trying to buy them back. And so the impact of that is I went down to Florida for about a 12-day vacation in November, and we thought about renting a car. And for 12 days, it would have been $1,500. We're like, forget that. So that's the kind of the micro. The more interesting thing is how quickly do the world's auto fleets transition over to electricity? And I always look for tipping points. And in my mind, the tipping point is the bike messengers in New York City. All used to be on bicycles, or then they had little gas-powered scooters. Well, now they have these electric bikes that go 30 miles an hour easily, run all night long on a battery about the size of a case of cigarettes, and I go, wow. So that's what it is. The batteries have finally got to the point where it's competitive with gasoline, not only in terms of price per mile, but also in I can go 400 miles. And I think the final piece of it is if you can figure out some way of doing a flash refill on an electric car. So instead of having to wait 3 hours to you're driving across country, you got to wait 3 hours for your battery to recharge. It can be done in 10 minutes. But for 95% of driving, which is basically, driving to and from work or driving to and from the shopping mall, whatever. Yeah, you don't need to worry about batteries. You plug it in every night, you unplug it first thing in the morning. So that will have a huge benefit, I think, on climate change, but it also provokes a huge upgrade in infrastructure. Originally power plants were here and cities were here. And so there wasn't a lot of infrastructure to get the electricity from, the Con Ed station on 59th Street to my apartment on 93rd Street. Well, now electricity is coming from wind farms in Nebraska, or solar farms in Florida, or offshore farms off of New England, whatever. So there's a long way to go to get the electricity from where it's being generated to where it needs to get to, and also has to be stored. And that was part of that soft infrastructure bill that would be very valuable. The Chinese are doing this already because, 1.4 billion people, 1.5 billion, it's some big number. If every single one of those had a gas-powered car, they would kill off the entire country. They need to drive to electric instead of gas. So that's a good question from John. Let's take a look at, there was another question beyond that. Yeah, so comment about why is the caseload in Florida so low. The client is commenting that she's heard that DeSantis is deliberately undercounting the cases and deaths. Would not surprise me.
Surprise, surprise.
Yeah. And then that was the end of the messages. And here's extremely good news. We're right up against 6:27. And we always try and start these things on time and end them on time. So I have my Christmas libation right here. I hope you have yours. Yes. Cheers, Buff.
Cheers.
Merry Christmas, Happy Hanukkah, and a Happy New Year.